Good day and welcome to SCO BRICS Insight, where we talk about what's really going on in the world of the BRICS. Now, today I want to talk about Russia's financial sovereignty. Now, the sanctions against Russia by the USA, EU, UK, G7 countries have presented Russia with an important opportunity to reposition the most important instruments of its sovereignty, its financial and stock markets, and to move them in a new direction. Now, let's look at the issues that were facing Russian financial institutions so recently and how are they being addressed now? And what does this mean for the country's economic sovereignty? Now, one of the key tasks of the Ministry of Finance is to build self-sufficient financial markets in Russia. Now, the Minister of Finance, Anton Sulyanov, made a statement during his confirmation hearing at the State Duma, and he said, "It's essential to have our own resources to finance investment and drive economic growth." Now, Russia's been engaged in the process of integrating into the global financial markets for the last 2 decades, but due to the small size of the capitalization of its stock markets, the domestic and global financial institutions used a significant portion of Russian investment capital for investing in the foreign stock exchanges like the London Stock Exchange, the Nasdaq and others. Some of the largest Russian companies conducted their initial public offerings, IPOs, on foreign markets where they could place a larger volume of their shares at higher prices, thereby attracting more capital. Russian banks and brokerages also offered their Russian clients the option of placing their funds on foreign platforms. Consequently, there was a huge capital outflow from Russia, which, according to the central bank, reached a total of over 100 billion in certain years. Now, the domestic market was left with a fraction of the Russian capital into the local markets. Now, obviously, things have actually changed quite dramatically. Now, a large number of those companies have actually returned, chased into Russia, and offer great investment opportunities listing on the Russian stock market. It's opposite. Important to remember that the money is the lifeblood of the economy, and without investment, there can be no business activity. Consequently, economic growth in Russia is largely contingent on 2 factors. Firstly, the proportion of profits retained by successful Russian companies like Gazprom, Norilsk Nickel for their own expansion. And secondly, the amount of capital remaining in the country following outward investment. Now, the West's confidence that sanctions would have a negative effect on the Russian economy was actually based on those outflow figures and statistics. It was necessary for capital to leave Russia and foreign investment to be restricted. Now, this lack of financial resources should have resulted in the collapse of the Russian economy, but obviously it became quickly apparent that not all aspects of the Russian economy were critically dependent on foreign capital or their financial markets. I mean, Russia also benefited from having a positive trade balance, plus the fact that its GDP is concentrated in the real sector, with actual commodities and goods being produced, and not in the make-believe of the services sector, including financial services. Now, the growth of the defence sector and its related metal and component suppliers, plus the growth of the commodity sector, including food and agriculture, led to a significant acceleration in the Russian economy, which is now ranked 5th in the world and the largest in Europe by the IMF on the purchasing power parity. Now, this growth is secured by an expansion of budgetary spending. But however, this sort of growth stimulation does have its limits. To ensure further economic development in Russia, it's important to reform and change the way that the Russian stock markets operate. This is precisely what Sulyanov has in mind. However, the challenge is not limited to the financial sector alone. I mean, until recently, Russia's inclusion in the Western world meant that a number of goods and technologies could only be purchased abroad. In today's context, the question of transitioning to technological sovereignty has become a key priority. And this entails ensuring that the country has a comprehensive range of its own key technologies. And a similar approach is logical in the field of education and science. Furthermore, Russia needs its financial system to be independent of the global economic institutions such as the IMF and the World Bank. And it's also important to ensure that the country is not dependent or exposed to the artificial global financial emissions center, or the artificial money printing office, which is the US Federal Reserve. I mean, too many countries around the world are dependent on what happens with the dollar. Now Russia has ceased to be involved in that. It doesn't have this problem. I mean, the overarching issue now is to reinforce the financial sovereignty of the country. This is the most important condition for increasing investment in high-tech companies, industry, agriculture, and many other sectors, previously noted Vladimir Putin. Now, one crucial step towards achieving financial sovereignty is the creation of appropriate infrastructure that allows investors, local investors and citizens, to accumulate savings and put them into good use in economic development projects. Now that Russia's been cut off from the Western financial markets, it's essential to create a domestic market that performs well. I mean, over the last 2 decades, Russian investors were completely misled by those they trusted in the West, and their capital placed in Europe has now been frozen following the anti-Russian sanctions. Now, at present, preparations are being made for the repurchase of blocked foreign securities owned by Russian residents. In response, a number of foreign companies' funds in Russian state accounts will be unfrozen. I mean, this procedure is a bit like the exchange of prisoners of war carried out from time to time in conflict. I mean, whether a significant amount of the capital will be repatriated to Russia is a matter of speculation, however. But Russians now need to invest in Russian equities rather than foreign ones. This will facilitate the growth of the domestic stock market and develop the financing of domestic companies. However, the objectives set out by Zulianov are of a long-term nature. It's not only the trust in institutions and participants that plays a significant role of the markets. The reform of its infrastructure needs to be put together. I mean, the infrastructure in question is of considerable scale and it's slow to respond to change. I mean, currently the majority of revenue generated by Russian banks comes from lending to individuals. That's consumer loans, car loans, mortgages, few import-export transactions and currency speculation. There are very few large loans for industry, and as a rule, and in general, if there are, these are linked to government-sponsored investment programs that are given a special rate of interest and for compensation. Now, without this, at the current rate of 16%, loans for investment projects are prohibitively expensive. Now, a developed stock market serves as an effective mechanism for utilising excess money supply. That reduces inflation. Now, the stock market, domestic one, can perform the functions. Central bank will be able to implement a more accommodating monetary policy, which will result in a decrease in inflationary pressure from rising wages and an increase in consumer demand. I mean, it's a well-established fact that easing monetary policy, i.e. cutting rates, has a beneficial effect on economic growth. And banks, if they follow this, will be able to extend more credit to the industry. I mean, what Russia really needs is several large investment funds set up by major banks or institutions and linked to their account holders, which offer investments into the shares of Russian companies listed on the stock market and for new companies listing, plus investing into their corporate bonds as they issue them to raise investment capital. I mean, it's going to be done by industry sectors like real estate, mining, IT, etc. I mean, one Russian gold miner currently offers bonds backed by gold, physical gold. So the interest in the capital of bond is linked to the price of gold, and at the end you can get your interest and the original money back in gold. Now, this type of bond was offered in total. You get to the point where in Russia, in gold, it would be to the point of 25 billion, and that's $1 billion. So if you imagine 25 billion worth of gold bonds, and given the fact that the gold price is now around 2,400, that's a hell of a bond, and that's actually more than the amount of bonds that are out in circulation in Rosneft. Now, the other problem is that Russia lacks sufficient numbers in the types of institutional investors, such as non-state pension investment funds, right, which proliferate in the West, but do cover a conservative investment policy. Now, if the government relaxed the requirements for companies to place shares on the stock market, conduct an IPO for the first time, then make it easier for funds to buy their shares. I mean, currently the IPO volume threshold is 50 to 3 billion rubles, and that's about $3 million from 50 million to 3 billion. Analysts at the central bank reckon that would offer around 30 billion a year in investment. So private investors need to be encouraged to make long-term investments. With the accounts of that type being introduced for them, they can provide benefits that encourage them to have long-term investments, like for a pension fund, and keep going for years, reinvesting, etc. I mean, times come now where Russians are confident of keeping their assets at home and investing in their own country and help its industries go. I mean, they don't need to replicate the structure of the gambling style of the Western stock markets, but stock markets where companies grow and prosper, and allow young and active businesses and innovative companies to receive the financing that's necessary for development, and all paid for by Russian citizens. Now, funds from Russian citizens can be reinvested in the Russian economy rather than abroad. Now, this will lead to technological progress and economic growth. This means there's an independent financial base that will allow Russia to exercise its full economic sovereignty. And that's really what Russia needs, is to have a stock market that works for the companies and for the investors and for the people. Anyway, I hope you've enjoyed this video. Please like and subscribe, and I shall be talking to you all again soon. Do visit the website SCO BRICS Insight and .com, and I'll be back with you soon. Thank you.